Surath Sengupta is Global Head of Transaction Banking Products at Lloyds Bank. We're here today in Singapore at the ITFA Trade and Forfaiting conference, and we're going to talk about pilots, interoperability, and artificial intelligence.
Thanks, Dipesh. Dipesh, as you are aware, we are kind of a bit of a pioneers in the digital dock trade space, right? So we are really driving the adoption there, really driving a lot of pilots there. Why do we do pilots? If you look at our journey, we started off actually doing this even before the ETDA came into place. So we had already done transactions before ETDA was in place using contract law, because we believed that this is the next evolution of documentary trade. So we started with that. And then once ETDA came into force, we started doing pilots using ETDA. And the first things that what we do is we learn from these pilots, right? So what was the first thing that we learned from this pilot? That we couldn't immediately go the full way. So we learned that customers were used to paper for a long time. So what we had to do when we moved to digital was still give them a visual representation of paper in a digital format. So we couldn't immediately move to data. So that was a big learning for us. A lot of banks thought that they would immediately move to data and it would be all digital, full on day one. It wasn't the case. So we moved step by step, each time proving through pilots that our assumptions were correct, or in some cases incorrect. That's what pilots are for. And that helped us learn that first, let's solve for how do we convert the paper into a digital format. How do we then look at converting collections and LCs into digital? And then now we are moving towards piloting, actually moving data rather than moving paper, which is where we are taking structured data. I think that's a great question, because that's something that we actively look at. And we actively look at from a few parameters. So we look at it from an adoption. And if you look at adoption, it's actually whatever we did in 2024, it's already 6 to 7x more in 2025. That's not the only thing. What is more important, Dipesh, is that once we have started digital trade with a customer, they have repeated transactions digitally with us, which is extremely important, that it's sticky. It's not a one-time thing that you did and everybody sort of talked about it and went away and then went back to paper. They stuck to digital because they saw the value in digital, because we proved to them that digital actually contracts the time taken for money to be realized. I think that was super important. The other thing is, it's not just this. We look at other instruments like guarantees, etc., which used to be extremely paper-based. 70% of all digitally eligible transactions are now coming digitally into us, and 35% of all such transactions are being issued digitally by us. So huge progress in terms of digital enablement of trade. So it's not just pilots. We are looking at measuring progress, and we are seeing really good progress and adoption.
I mean, interesting. What does digital mean?
So what does digital mean? Digital can mean various things to various people, right? So the way I look at it, if you look at transaction banking end to end, payments is primarily digital, right? I mean, there is some cash, but it's very tiny. Open account is primarily digital. There is some paper, but very tiny. The last bastion is guarantees and documentary trade. So we are moving that to digital. But to your point, and the point that I was making earlier, digital is a journey. You can't just say, I will switch off paper tomorrow and everything will move digitally, just like it happens in open account or payments. So what we're doing is step by step, and we're measuring at each step. How do we convert the paper journey into a digital journey? And then how do we move that digital journey into a data journey?
Thank you.
That, to me, is true digital. So if you look at it, let's talk about two journeys, because they're kind of happening in parallel. So one is the regulatory framework journey. So if you look at, obviously, ETDA came into force in the UK, then France, then a few other countries have started adopting it, which all you know. But what we have done while this is sort of going country by country in different parts, we are also sort of starting to do business digitally with different countries who are not on ETDA. How are we doing that? We are doing that by using contract law in some cases, or using sort of understanding the legal framework in which those countries operate and finding common ground there. Now, one of the key enablers, if we are to do this, because legal reforms take time, right? Trade is multi-jurisdictional, it is ununiform, it will take time for MLETR to be adopted across countries. One of the things that enables it is standardization. And KTDEE drives standardization, right? It tells us what is the structured data that can be used from different documents. I think that is a huge step forward. Now it seems it's just guidelines, right? So will it be adopted, etc.? That is still a question mark. So we work very closely with Enigio. Enigio has been one of the first to sort of go through the framework and get themselves certified. So I think that's all been very positive, but we have to still see adoption. But we are a big believer in standards, because standards allow adoption to happen more uniformly across the globe, which is very important. The last thing that I would say on this is that we are working on a POC with some very large parties using KTDE to really prove that it will be superbly important to really move the dial. So watch the space on this one.
I'm watching. I'm asking if you can give any more details now to our readers, but I don't know what you're saying.
Look, you will see this, and we are looking at this both from an ICC perspective. I sit as a vice chair on the ICC Banking Commission, so from an ICC perspective, we are looking at this. We're looking at this obviously from a Lloyds perspective. I think there is so much interest around this, and there are other banks involved, other counterparties involved. I think it will be truly special if we can get there. So, Dipesh, if you look at AI now, it is all pervasive for us. So we are looking at AI in our operational processes, where we are using AI to read and understand documents and predict things. We are using it in our sales processes to better understand our clients' needs and be able to serve them better. And we are looking at it from a product perspective to develop products which are more intuitive and is able to respond to client needs properly. So it's all pervasive. All this is very, very positive. But like with everything else, such a powerful technology has to be used very responsibly, right? So how we use it is going to be very important. And as a regulated industry, there are some things that we are very open to looking at, is in terms of what is the impact for our customers, for our colleagues from an AI perspective, and how do we responsibly implement it? Are we able to interpret the solutions in a way that actually makes regulatory and commercial sense for our businesses? So that is the key point. Can we implement it responsibly?
Thank you very much. That was Surath Sengupta, Global Head of Transaction Banking Products at Lloyds Bank, here at the ITFA Annual Trade and Forfaiting Conference. Thank you, Surath.